All right, welcome to Talk Tickers. We've just got Sandvik's Q3 results, and honestly, they're a bit of a puzzle. You've got the market cheering, but if you just look at the headline numbers, well, they don't quite tell you the whole story. So let's dig in and figure out what's really going on here.
So here's the deal. At the very heart of this report is this big contradiction, right? Order intake? Absolutely smashed it. I mean, way better than expected. But then you look at revenue and profit, and they were a little light. So what do you believe? Which one of these signals is the real story about how healthy this business actually is? That's what we need to figure out. Okay, so to get to the bottom of this puzzle, let's start where everyone else does, the headline numbers. These are the big figures that flash across the screens first and really set the tone for the market's reaction.
First up, revenue. It came in at 29.2 billion Swedish kroner. Now, if you strip out currency effects, that's actually up 5% organically, which is pretty solid. But the number everyone sees, the reported number, is down about 4% from last year. And we are definitely going to talk about why that is in just a second.
Next up, we've got the adjusted EBITA margin, which landed at a pretty resilient 19%. You know, that's a solid number, but it was just a little shy of what analysts were hoping for. And a big reason for that miss? You guessed it, currency. And now for the star of the show, order intake. It came in at a huge 30.8 billion kroner. That's up a massive 16% organically. I mean, that signals some seriously powerful demand for what Sandvik is selling. And get this, the book-to-bill ratio was 105%. That's the key right there. It means they're bringing in new business faster than they're even fulfilling current orders. That's a great sign.
So let's put it all together. You can see the story pretty clearly here, right? You've got a miss on revenue, a slight miss on margin, but this huge, significant beat on future business. That's the order intake. And what did the market do? It completely looked past the misses and focused on the future. It rewarded those strong orders and pushed the stock higher. Pretty interesting reaction.
Okay, so let's really unpack that. How can a company have such amazing demand on one hand, but still miss its profit targets on the other? Well, the answer comes down to two really powerful opposing forces that were at play this quarter.
Yeah, this really lays out the whole tug-of-war for the quarter. On one side, you've got this awesome tailwind, right? Incredible organic order growth, mainly from mining and their digital stuff, which is building up a really healthy backlog. But on the other side, you have this absolutely brutal headwind from foreign exchange. I mean, just the currency translation alone wiped out 837 million kroner from their profits and knocked 1.3 percentage points off the margin. And they're telling us to expect more of that same pressure next quarter.
And you know, the CEO, Stefan Ving, basically said as much. He said, and I'm quoting here, "It's a quarter that's been characterized by a strong momentum and strong demand." See, he's focused on the operational reality. The business itself is strong. The whole currency thing, while it's a big deal on paper, is more of a financial translation problem, not a problem with the actual business. The key takeaway here is that the underlying business is absolutely firing on all cylinders.
So where did all that incredible momentum come from? Well, the main engine was their mining division, no question. Organic orders there were up a massive 24%. And equipment orders specifically, they surged an unbelievable 75% compared to last year. That's a direct result of what's happening with commodity prices. Things like gold and copper are high, so miners are spending.
And if we dig just a little bit deeper, we can see exactly where those orders came from. A huge 70% were from what they call brownfield projects, basically expanding mines that are already up and running. This is a really, really strong signal. It tells you that miners are pouring money into maximizing what they can get out of their current assets, like right now, all driven by those high commodity prices.
But it wasn't just mining. The other big growth driver was Sandvik's high-margin software and digital side of the business. You know, both their digital mining and intelligent manufacturing segments posted double-digit growth. Plus, they launched a new AI-based copilot for their Mastercam software, which just shows they're innovating. See, this is the key. It's not just about selling big, heavy machines anymore. It's about selling the super high-margin intelligence and software that actually makes those machines run.
All right, so that's the story of Q3. A bit of a mixed bag, but with some really strong underlying trends. But what about the future? What did management have to say? Let's dive into their guidance and the key themes they were talking about.
The guidance they gave was actually pretty straightforward. The big number everyone's watching is that FX headwind. They're telling us to expect it to get even worse in Q4, hitting them for about 1 billion kroner. Ouch. But beyond that, things look pretty stable. CAPEX and tax guidance are holding steady, and the balance sheet is rock solid, with leverage at just 1.2 times EBITA. So despite all that currency noise,
The financial foundation is strong. And when you listen to what management was talking about, it was all about execution. They made it really clear that they've already handled the trade tariff issue by using surcharges. They're also actively managing the currency ups and downs. And they really highlighted how their decentralized model lets them react super quickly to whatever the market throws at them. It's all about being nimble.
All right, so that brings us to the big finish, our take. We've looked at the numbers, we've heard what management had to say, so now it's time to put it all together into our actual investment thesis.
You know, with a story this mixed, the question on every investor's mind is pretty simple. So, where does the stock go from here? So here's how we see it broken down into 3 steps. Step 1 is the catalyst. Right now, that currency headwind is like a fog, obscuring how well the company is really doing. But as we get into 2026, they'll start comparing against these tough numbers, and that drag is just going to fade away. Step 2 is the outcome. When that fog lifts, that incredibly strong order book they've been building is going to convert into clean revenue and profit growth, and that's going to drive margins way up. Which brings us to step 3, the action. We think this creates a window of opportunity right now, a chance to build a position before the whole story shifts from margin drag to clean growth.
So, based on that thesis, we are initiating coverage here at Talk Tickers with an outperform rating.
Look, we think the market got it right this time. The smart money is looking straight through this temporary FX noise and seeing the powerful order growth for what it is. We see a clear path to higher earnings as soon as these currency pressures start to ease up, and that powerful engine underneath is finally revealed.
So that's our take on Sandvik's Q3. And as always, just a reminder that this is for informational purposes only. It is not financial advice.